Hey, good morning, y'all. How you doing? I'm DJ. This is
Corey on the mic.
we are Bricks and Bread.
Yes, sir.
Help y'all understand how important it is to become a homeowner and how the financing part of this can all set you free. But what we really want to do today, we really want to drop some education on y'all when it comes to interest rates. There's a lot of misinformation out there about interest rates and how they really affect you. Of course, there is the big stuff that you see on the internet, and then there's the reality that you're going to understand when you sit across the table from Corey. And it's a kind of a problem because we've been doing this a long time. And the interest rate conversation is still the same as it was 20 years ago.
It is.
So we really want to enlighten you guys on how interest rates really affect you, and depending on your situation, how interest rates affect you. So, by the way, don't forget to subscribe, like, share, do all that good stuff. But let's get into it right now, y'all.
Oh, man.
Corey, briefly begin with the basic understanding of what interest rates are. And then we'll get into what they really are.
Okay. Lots of talk about Fed Chair Jerome Powell is going to drop interest rates. And so the first thing you need to understand is that when the Fed cuts interest rates, they are not cutting mortgage rates or car rates
or credit card rates.
What they are cutting is called the Fed funds rate. And what that is the rate by which businesses can borrow money from the government. That's the rate. When they say the Fed has cut rates, that's the rate they're cutting. And so it's related to some of these other things, but it is not a one-to-one relationship. In fact, it is possible and has happened where you can cut the Fed funds rate and mortgage rates will go up. Right? It just depends on all the other economic factors. Mm-hmm. So that's the first thing you need to understand, that there's not just, they cut it 0.5%. Automatically, interest rates are not dropping 0.5%. They just aren't. Like they're not related to that extent, right? And so that's the first thing you need to understand right off top. The second thing you need to understand is that what you go online and see is not necessarily going to relate to you. Because when they quote rates, when you go on Zillow and they say, this is our estimated payment, which I've never been able to get to, by the way.
Never been able to get to that. Right?
Never been able to do the math and figure out how they got there. But when they quote that, it's 20% down, 800 credit score, low DTI. They are giving you the absolute best case scenario, right? And most people don't fall into that. So that's why that payment doesn't make sense. And that's what you're seeing on the internet as well. When they say, this is what our rate is, they're giving you, this is the credit score, a great credit score, 20% down, all of those sorts of things.
They don't say that.
No.
Because it's a marketing ploy.
It's a market. They want you to call.
Want you to call.
Yeah.
That's what it is. We used to call it, what do they call that? Teaser rates?
Yeah. Teaser rates.
Yeah. Just to get you to call. So there's a marketing ploy behind it because it's a marketing business.
Yeah.
Everybody wants business, so you got to go out and you got to market to get that business. And we're going to give you the best case scenario. You're going to see the best case scenario. It doesn't mean you fit into it.
That's right. And the other thing they don't tell you is how much that cost. Right? Because it could be 1.5, 2 points to get to that rate.
Yep.
But they're not quoting you that. And you often have to look in a very, very small print. And it's put in the most technical terms possible. So they can say, we disclosed it.
Exactly.
But if you don't understand what they're saying, it won't make sense to you. So you'll miss that piece of it.
Yeah.
So that's the first thing you need to understand right off top is like
how they work.
Yeah. And that, that understanding the difference between the Fed cutting rates and what that really means for mortgage rates.
So in the market that we're in right now, which in Arizona is a seller's market.
Yep.
And there's a lot of houses on the market. A lot of buyers are sitting on the fence. Mm-hmm. They're talking about dropping rates on the internet tomorrow because that's when the Feds meet.
Yep.
So we've talked about how you need to get into the game before the frenzy happens.
Correct.
So what do you expect to happen with the verbiage that's out there as far as rates are going to drop tomorrow with the market happening, with the buyers on the fence right now?
So the first thing, the other thing you need to know is as soon as they leave the breadcrumbs that rates are going to drop, it's already calculated into the market.
Yep.
So if Jerome Powell does exactly what he's talked about doing tomorrow, we will see no change in the market.
No change.
the rates are going to be the same. It's already there.
Yep.
It's already in. It's already calculated in the rates today. So if there's a surprise, in fact, if he comes out tomorrow, and I think he said there's going to be 50 basis points cut.
Yeah, 50, quarter or 50. Yeah.
Yeah. If he said 50 and he only cuts it a quarter, rates are going to go up tomorrow.
Yep.
Is what's going to happen. So again, it's not like it's a magic day and suddenly, it's rainbows and unicorns and the rates drop and everybody's good, right? Like that assumption is already calculated into the market. So that's the first thing. And I have had buyers tell me in these last 2 weeks, I'm going to wait until the Fed speaks because I know rates are going to go down. And I've tried to explain to them, and most people just they don't understand. They don't
forecast. They don't look ahead.
Yeah, and they don't understand kind of just what that impact is. Despite my trying to explain to them, like the rates are cut now.
Yeah,
we can go into it now. The second thing, which I think is what you're alluding to, is what happens even though we know that that's already been calculated into the rates. Most people are saying rates are cheaper now. I'm going to jump back into the pool and start looking for houses. And so now you have that compound effect of before, when you had less competition, houses were sitting on the market. You could get seller concessions. You could get all those sorts of things. Now, as soon as more people jump in and you have more than one offer on a house, I'm not giving seller concessions.
Nope.
I got multiple offers.
Yep.
And so it changes the dynamic, not just in purchase, in your monthly payment, but also purchase price.
Yeah. Because what will happen is that the prices will start to go up.
Correct.
Because first you'll lose concessions and you'll lose repairs on the house. You lose reasons for the seller to want to sell the house. Now the seller's thinking about, okay, how much money can I really make? Because there's multiple offers, because the shift has happened and it's going to happen. It's just a matter of when, but it has nothing to do with the interest rates.
Yeah.
So when it comes to the interest rate part, so right now, we'll just say 7% right now, 6.99, just to be below 7.
Yeah.
So if I was to get into a house at 6.99 and got a screaming deal, seller concessions, repairs done, loving the house. Wife loves the house, dog loves the house, making memories, doing all that fun stuff.
Right.
What could you do for me in a year? Let's say the rates drop.
Well, we would refinance you and your payment would drop significantly. Potentially, depending on how much you put down, you might drop PMI as well. So you could save, $300 a month on it due to rate and PMI and all those sorts of things. And if you close with me, I won't charge you any bank fees as well.
So win-win either way.
Yeah. And I can even, so a lot of people say, but I got to start my mortgage over again. I got to start to 30 years. I can even make it custom to the term. So if we're 2 years in, I can make it a 28-year mortgage. So you're still at the exact same spot as you were when you started. So there's a lot of ways to go from that. The most important thing, we've said it before, get in the market. Get in the market. Because then you have the options. If you wait out, now you're beholden to whatever the market is at that time. If you're just sitting on the sideline. But once you're in, I can refinance, I can sell, I can put more money in, I can do something in the house, or maybe I can get a HELOC. Like, you have all of these other options to play with.
Which will only better the situation, because now you've got somewhat 80% of control of what happens.
Correct.
Because you're always going to be subject to the market, and always going to be subject to what somebody's willing to pay for your house. But at the end of the day, you got control. You're growing money if the market's hot. You're growing money in equity.
Yep.
So getting in the game is just that. Get in the game so you have the options. So the the interest rates fluctuate. How often do they fluctuate?
Every minute of every day.
And that's the thing about the part of the interest rates people don't understand. That rates fluctuate every day. You might be at 6.5 today. At the end of the day, it might be up to 6.8, 6.9.
Sure.
So that's why planning ahead and sitting down with Corey and really getting an idea of what it is your goals are and what you want to accomplish, let's say in the first 3 years, is going to determine how he sets you up. So it's important to understand that you can't bank on the rate, because the rates change. Your rate's going to change. The average refinance after you buy a house is 4 to 7 years?
Yeah.
So you're going to refinance within the first 7 years. That's national. Everybody does it.
Yeah, refinance or sell.
One of the two, because equity has grown, and either you sell it and pocket that equity, or you refinance and pocket that equity. Whatever you choose to do, but you're not going to have that option if you don't get in the game.
Yep.
That's the biggest thing. Buying a house is easier than people think. It's just you got to be willing to come to the table.
Yeah.
Ask the questions. Let us know what it is you want so we can figure out a way how to make you have it. That's really all that this is. Goals as far as having the opportunity to buy a house. If you're not ready now, we'll put a plan together so you will be ready in 6-12 months. We just got to know where you are so we can get you where you want to be.
That's right.
That's really all that this is.
That's all it is. And then from there, you make a plan from how long do you plan on staying? Because, right, how long do you plan on staying in the house?
Yeah.
Do you want to use this as a rental house next and buy a different home? Do you want to sell this to go somewhere else? Do you want a bigger house, a smaller house? All those sorts of things. We start to calculate, okay, this is the best way forward for you to get there. And so that's kind of how we want to operate. We want to help you grow. And to do that, we need you to sit down, come to the table with your thoughts, your dreams, where you want to be. And then we will set a plan in place to help you get there.
And 9 times out of 10, we get you there.
We get you there. Listen,
it's just information.
Yeah. Listen, you will get you there.
Yeah.
We will set a plan.
Yeah.
And I'll check in on you.
Middleman.
Yeah. I will check in on you. Hey, where are you at? This is where we are with this, blah, blah, blah. But you're going to have to do the work yourself. The work, which is just,
Yeah. Like if you got credit issues.
Yeah.
You got to, we'll tell you how to get that taken care of. You need extra income. We figure out a way how to make that happen. There's multiple ways that we can create that income legally.
Yeah.
There are so many avenues that are out there because everybody's different. We just have to know what your avenue is, and then we're going to guide you the rest of the way. The whole idea is to get you into a house so you can start becoming financially wealthy, generational wealth, and create wealth by real estate, which is buying properties, investments, rentals, all kinds of stuff that is what everybody really wants, unless you don't want to be a homeowner.
Yeah, I mean,
that there are people out there that don't want to be homeowners. That's okay too,
and that's all right too. I just think that, we know that personal net wealth is 4 times greater for people who own their homes than for people who don't, and there's a reason for that. It sets you up just in the habits that you have and what you're doing, and you just take ownership. Bad term, but you take ownership in where you are because you own it,
and that's how you create opportunity.
Yeah.
Life is only as good as you allow yourself to live, and owning a home just increases those opportunities to do that. It's a beautiful thing.
It is.
Y'all quit worrying about interest rates.
Listen, interest rates are going to change. They just are. It's going to be different. It's going to be, higher than lower, and none of us have a crystal ball, and we're in an environment where like the typical indicators about where things are going are not accurate at this moment.
Haven't for like last 12, 18 years.
So, not to be skeptical, but we've been hearing for 2 years that interest rates are coming down.
Mm-hmm.
So do I think they're coming down? I think they'll come down eventually.
Yeah. I think they're going to have to.
Yeah. But when? I can't tell you that.
Yeah.
I can't tell you that. So I think it's just important to get in where you fit in, and then you have the opportunity to make changes as things progress around you.
As a forecast, when it comes to refinancing, what is the average time frame between the time you purchase a house and the time you are available to refinance a house?
So it depends on a couple of factors. How much money did you put down, right? Because you have to have the equity in there. So if you did 100% financing and you have DPA and those sorts of things, it's probably going to be a little while. It's probably going to be several years.
What is DPA?
Oh,
you're talking in acronyms.
Down payment assistance.
Okay, thank you.
Yes, down payment. If you did a down payment assistance program where you came in with no or very little cash, you're probably not going to be able to refinance very quickly for a couple of reasons. One is, to refinance, you need to have some equity in the house, right? Probably 10% at least before it makes sense for that. So in other words, if you didn't put 10% down, you're going to have to wait until you have enough appreciation in home price. So you have at least 10% so that you can do that to go from there. So that's the first factor. The second factor is, most banks don't want you to make at least 6 payments before you refinance. Okay. Right. So you're going to have to do that. But other than those things, if we were in a crazy environment like 2020 where prices are going up insane, you can probably refinance every 6 months if you would like to.
then keep dropping the interest rate.
Yeah.
If the rates drop. And what is there a normal point of reference for refinance? Say if I can drop my interest rate 1 point, is that kind of a minimum?
1 point would be ideal, I think, a full percentage point. Depending on loan size, it's going to be several $100s probably, depending on how much outstanding you owe. It's more going to be a personal preference, like what makes sense to you, right? Like $100, I probably wouldn't do it for $100, but to some people, $100 is a big difference. Yeah. And they would do it for that. So it's going to be up to you and what makes sense for you. And that's it, right? So no hard sells, no listen, here's the deal. I can move your interest rate from here to here, and your monthly payment will drop from here to here, and your long-term forecast and interest paid will drop from here to here. Does that make sense to you? And if yes, then let's do it. If not, I get it. Let's find out what is your target. I'll set that target up, and then I'll call you back when we hit that target.
Yeah. You mean communication?
Oh, man. Listen.
Sorry, y'all. These are like inside jokes. Communication is huge from both sides.
Yeah.
The more we communicate with each other, the easier it is. I mean, it's just information and numbers. I mean, those numbers don't lie. So we really want to hone in on what it is that you want, what your goals are, and how you want to be in the next 5 to 10 years is really what makes this thing go.
Yeah.
So just, reach out to us. Talk to us.
Talk.
Email.
Open lines of communication help.
DM.
And when you see this after the Fed talks tomorrow, call. I don't think things are going to change much from where they are today. I don't think. Now, listen, again, no crystal balls. I'm not promising that. But in all likelihood, it's going to be pretty similar to where it is today. If you're waiting to see what happens, that's fine. You can still call me after that. I won't say I told you so. I might be thinking it, but I'm not going to say that.
If you see his face, you're going to see it.
I don't have a poker face, so you will see that if you're in person.
and just to, from our view, to get rid of the market's going to crash, and I'm waiting for 5% or 3%. That's what we heard. I heard that yesterday. Waiting for 3% to show up again. That's not going to happen.
If we get to that 2-3% again, something is jacked
wrong.
up. Something went wrong. Like there's a global event. I mean, think about what had to happen.
To get the 2 and 3.
It was a global event that shut down commerce around the globe.
Yeah,
that's what it took for us to get down to that. So. Barring something catastrophic like that, it's not going to happen.
Which is why you need to pick up that phone and you need to text and call Corey so we can get you in line and straight to really what's going on. So you know exactly where you stand and what your purchasing power is so you can get in the game. That's what we're here for.
Yeah.
So
just get in the game.
Do yourself a favor. Do us a favor. Reach out, talk to us just to have the information to call, a quick Q&A, so that you are set straight with what it is that you want to do when it comes to buying a house. That's what we're here for.
That's what we're here for.
Oh, and subscribe, like and share. Yeah, do that.
Come on, it's 3 things. You can make that work.
Just a little tap. That's all we would like.
Yeah, so, that's it.
But if you have questions, put them in the comments. If you also want to reach out to us, you can find our information in the comment section or some section. It's down below somewhere. But just reach out to us. Let us know what's going on. And appreciate y'all.
Appreciate y'all. Have a good one. All right.